All right. Good morning, everybody. Happy Tuesday. Welcome to the morning show, Stock Market TV. Spencer, Steve, JC, Alfonso, with you on this beautiful spring Tuesday morning. What is not to love? We have gorgeous weather outside. We have earnings reports. We have charts. What is not to love about today? Todd Sohn is our guest, and then Patrick Donawellen will join us later on in the show, as he does every single Tuesday. Good morning, chat. James, Todd, Per Ingvarson. Hope I'm saying that right. ZL, Josh, Neri, Ravi, and Dominguez. What's going on, everybody? Let's get this show on the road, shall we? We shall.
Oh, nice little Tuesday. Just talking about small caps, leg workouts, legs on Mondays. That's the hack. Strazza does lunges and squats every Monday, right, Strazza?
Nope. None of that.
Listen, I'm not like one of these like gym rat, how much you bench, kind of bros. But at my elder age, I have learned you get legs out of the way on Mondays, and then it's kind of like everything from there. You could do all the curls for the girls you want. That's what Spencer does. He looks in the mirror and he does the curls for the girls.
No,
right?
That ain't me.
I don't need to play around with free weights. I'm not trying to hurt myself.
You're not going to hurt yourself. You're a dude. You need to lift weights.
That's not true.
Yes, it is true.
Oh my God.
Yes, it is true. Men that don't lift weights, they have problems.
You just told me you're a dude. You need to lift weights.
Yeah, if you're a dude, you need to lift weights. Like, I don't know much about like women and their bodies. Like they have like their own situation going. I'm pretty sure it's good for them too. But for dudes, definitely.
I think what you mean is that you need to exercise, right?
No, I think you need to lift weights,
pull-ups, and things like that.
Lift weights.
No.
Yeah, lift weights. Ask your doctor. Ask your rabbi. Ask them.
I usually, when I lift, I say wait.
Both of you guys have the same rabbi. The three of us have the same rabbi. Ask your rabbi if you should be lifting weights.
Usually when I go lift, I say, wait, I don't want to do this. And then I don't do that.
Hey, now. All right.
I'm with you, Spencer.
He's going to be here all night, ladies and gentlemen. Don't forget to tip your waitress.
Let's talk markets.
Please, please. All right, can we talk about the worst and least relevant companies on planet Earth? Spencer, if you will, slide 2. I just want to bring this up just to show the mess that the worst and least relevant and smallest nonsense companies on this here planet of Earth, one can argue even the whole galaxy, just have been a hot mess. Actually producing a negative return since the beginning of 2022. Negative return over the last 30 months, essentially. Wow.
Where's
I just wanted to throw that out there. Let's just do a quick little rundown and we'll come back to this. Dow futures, ladies and gentlemen, doing nothing this morning. Completely flat. 39,000 for the Dow Jones Industrial Average. S&P futures, absolutely flat, doing nothing. Right around 5,200 for the S&P 500. NASDAQ 100 down a little bit, 16 basis points. No big deal, but the NASDAQ in the red. 30-year bond futures, Strazza, up again. What a May the bond market is having. Granted, low bar, but not going down, those bonds. I think that's a big deal. Gold flat, a little over 2,300. Silver flat, 27.5. Copper down almost a full percent. Just under 460. Crude oil flat around 78. The dollar slightly higher, particularly against the yen. Volatility index right around 13.5. And then over in the funny money, Bitcoin up 400 points, 63,600. Ethereum just under 3,100, up a little bit on the day. And then finally, Spencer Israel, Solana 155, up 1.5%. Total crypto market cap just under $2.3 trillion. Anything
right.
out there from the market futures before we get into
Big level for Solana, the last one that you mentioned. So we talked about that VWAP from the March highs. Pretty much there. We're a couple dollars above it, actually. So
okay. So here's what I'm looking at here. Throw up slide 3. So just because these companies don't matter to civilization doesn't mean that we have to give the profits back, right? In fact, I love small caps. So these are the minor leaguers. So what we do is we look for companies between $1 and $4 billion in market capitalization. They don't have to be in America. They could be anywhere in the world. They can be in any sector or industry group as well. And what you'll find is when you look at all these small caps, because there's so many of them in so many industry groups, that on an individual basis, they tend to move less in line with the overall indexes versus something like, one of these mega caps that are not always, but are going to move more in line with the major indexes. So it's easy. So my point is, it's easier to find stocks that are bucking the trend in small caps. Granted, there's a lot more of them, but nevertheless, it's easier to find stocks in small caps that are bucking the trend. So even in this hot mess of an environment, throw back the double pane, even in this hot mess of an environment for small caps, there are still tremendous opportunities. There have been this entire time. Up above, you got the Russell 2000 small cap index. They'll let anybody in, no requirements. Doesn't matter how much money your company's losing. As long as you're 300 million in market cap, you're in, baby. And then the S&P 600 down below requires a track record of earnings in order to be included, regardless of whether these small caps are making money or not. At the index level, they all suck. That's the common theme here. However, like I said, there are opportunities underneath the surface. And just because the company doesn't matter doesn't mean we have to give the profits back. And so that's what we're doing. That's what we're looking for here. Love this scan, Strazza. Of all the scans that we have, of all the things that we do, this is probably like go to the minor leaguers, Spencer. This is probably like the most easy to understand, most common sense scan that we've got. The idea is to catch these little guys before they get called up to the bigs, right? Small caps indexes are always kicking out their best players, right? So we want to be in them as they're getting kicked out, right?
I like what you said about how we'll find stuff in here that's just working and has nothing to do with the broader market or what's going on with the tape that day, right? So some far less correlated issues than we have in our large cap scans. I'm thinking of Virtu because it's at the top of this list this week. Yeah. Right.
So Virtu is one of these like unique situations that takes advantage of higher volatility markets. So speaking of not being correlated with the indexes, it's almost negatively correlated. It's not, but right? Theoretically, it kind of is.
Stock's up 12 of the last 13 weeks.
Yeah.
Killing it.
Makes sense. In a messy market environment, right? These guys are killing it, right? Volatility jumped up a little bit, not that much, but even that little spike in volatility even brought this stock higher, right?
People used to like overlay the chart with volatility when they first came out because it was kind of a new business, right? It was like the first public high frequency trader. It doesn't really work that well, but that is the idea here. Yeah. Anyway, there were a number of really strong names on the list again this week, like every week. Virtu stood out because it popped up on some other scans over the past few weeks, and we tend to see that a lot. Also, kind of love that reinforcement across our scan universe when one keeps popping up across the board. So
what are your thoughts, Strazza? Because I know you think about this sort of ridiculous stuff. What do you think about, how small caps are like important for the economy? They're the largest employer, where small businesses are really important. You think that's a bunch of bullshit?
Small businesses are critically important.
But these small cap stocks are not small businesses.
Most of them, no.
Right.
Like the small caps we talk about on here, if you saw them out in the wild, you'd probably consider them a large business.
Right.
No, it's not your local deli.
Right.
So, listen, is there something to it? Sure. What are you going to do with that information anyway? Right? If I'm supposed to look at a chart of the Russell 2000 and say, oh, the economy stinks right now, right? Is kind of where you're heading with that. That doesn't really help me.
That's what people tell me. They're like, JC,
Yeah.
they're such an important employer to America, and da 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 da. And I'm thinking to myself, like, bro,
Maybe.
your economy and your employers are not important to me at all. Like, why should I care about those things?
Apple's an important employer.
Maybe, I don't even know. Are they? Probably, right? They probably have a lot. I mean, they're a big company. I imagine they got a ton of employees, right?
Walmart's an important employer.
Shout out Walmart. Shout out people of Walmart.com.
We got some retail earnings to hit. No,
That's why the internet was invented, for websites like people of Walmart.com. You understand that, right? Like, new technology.
you talk about this site so much.
So good, dude.
I've-
It's so
I've
good.
never
And you
been
can
there still.
filter. You
I've
can
never been on
filter
the
by like
site.
hottest mullets. You know what I mean? Like, it's just. But this is the truth. These technology in general, it thrives with people having fun. It thrives with people doing silly things in the early stages, right? People of Walmart.com has been around forever. This is a great example. Now in like crypto land and things like that, these same nerds are having fun doing silly things, right? Isn't there like a common theme there, Strazza?
I guess. I don't know. I don't overthink the people of Walmart.
I don't think you're spending enough time. You should get an RSS feed for people of Walmart.com. I used to have one. It just became overwhelming.
So I'll do a retail segue here. I'll try my best.
But what retail are you referring to?
A bunch of reports came out over the past, I guess, week or two where
Slide 7.
hmm?
Slide 7.
So a lot of executives from particularly fast casual too, McDonald's that came up, Starbucks that came up, are complaining about, oh yeah, we could talk about this too, are complaining about how finally their inflated prices are too much for consumers. And Spencer, I thought of you because you're always complaining about how much Big Macs cost now.
Okay.
What? Have we not had this conversation on here before?
I'm not complaining about anything at McDonald's. I haven't been to McDonald's and I don't even know when. I'm saying other people are complaining about the prices of McDonald's and Chipotle and whatever and food delivery, Starbucks. I don't know.
So it's a thing now. This earnings.
It's a thing.
I hadn't heard it. Instacart and Uber teaming up. Look out, DoorDash. I think Dash is down like 6% in the pre-market. This, I don't know if it kills them, but it doesn't help. So I love this. I love this. You know, I love this.
This headline just made me think that we are moving rapidly towards a world where Instacart and Uber Eats and DoorDash combine in some way, shape, or form.
Why? But why do they need DoorDash?
Okay, fine. No DoorDash.
They don't need
But
it. You know what I mean?
why do we need 3 food delivery apps?
Instacart's very different from the other two.
Okay, fine. Fair enough.
Right. So Uber Eats partnering with Instacart makes Uber Eats, I think, gives them more of an advantage. Not that they didn't already have one over DoorDash. What you can now do is you log into the Instacart app and you'll have like a restaurants tab, and you can just basically order from any of the Uber Eats restaurants. So I don't know how much it really moves the needle for.
But
Uber.
remember, Instacart is one of, I don't know, a half dozen grocery delivery apps out there. They're just the largest one. Why do we need 6? Why do we need Shipped, which Target owns?
People use the other ones. I like Fresh Direct. What else? Fresh.
There's Shipped. There's Fresh Direct. There's all these because there's no national grocery chain in this country, so that a lot of them use their own thing. I think.
Yeah, but Instacart's not a grocery store.
No, I know, but a lot of like Kroger will have their thing, and Target has their thing, right? And
and they're not good, right? Like even Publix, they won't deliver to me. I think they'll shop it and put it like in bags, and you can go pick it up.
I don't know. I'll be the last person alive to use one of these apps. So.
We haven't talked about this stock for a very long time. I remember when it came, I haven't even thought about it. I remember when it came public, and I wish we could zoom out on the chart because it is a nice space. It came public fall of last year, fell for a month or two, bottomed out January, and it's almost a double at its highs a couple of weeks ago, almost a double off the lows, but the base is in, 200-day moving average pointing higher. Instacart was a really cheap stock when it came public. Remember that, Spencer?
I do.
Like it didn't come public at some crazy tech startup valuation. So I think this is an interesting story.
All right, we'll see. You guys want to talk about Disney?
Please.
We had
Yeah.
earnings. I have to admit, I
Yeah.
was caught a little off guard this morning.
Still nothing good
Disney-
from Disney.
Disney, I knew they reported today, but they have not reported in the morning since 2015.
They're trying to trick you.
So they tricked me. I was surprised. Anyway, Disney, top line beat, bottom line beat, and look at this. They are actually starting maybe to make a profit on their streaming operations. Not entirely. You have to take out ESPN Plus, but if you take out ESPN Plus and you just look at Hulu and Disney Plus, profitable last quarter, made money. Now, of course, we know that their main business, their old business, the cable business is dying on the vine, right? But the pivot to streaming may be working, showing some.
Also, let's remember, stock's down 6% this morning. It's up 50% since the fourth quarter. So just to put things in perspective, because I know this chart doesn't necessarily highlight a 50% move. It looks like a sloppy mess, which it is.
Yeah.
But up 50%. So giving a little back, not a big deal at all.
No, not a little bit, or not a big deal. So let's see, they added 6 million new subscribers last quarter to Disney Plus, bringing their total to 117 million across the board. Still kind of trucking along on the parks unit, but really the headline here is that their streaming business is on there. They're making money, even though, and the pivot from cable to streaming maybe starting to work. Their cable business keeps declining quarter after quarter, year after year, but they're starting to make money with the streaming. So good for them. So anyway, stock down 6%, like you said, been on a great run of late. I still own it. I've owned it for I don't know, 4 years now, 5 years. I don't even know.
If everything about the report is so good, then why is the stock down?
Great question.
They missed on revenue.
Stock's up 50% since the fourth quarter. You don't think a little bit of that was priced in?
A lot of stocks are up a lot this year. Newsflash. If you just go
for the record, I don't know if you got the memo, but a lot of stocks have been up for a long time, and Disney was not one of those. So Disney up 50% is actually a big deal.
Weren't you in this against the lows?
Yeah, I'm still in.
Yeah, both of you guys. Hey.
Oh yeah, this isn't like a victory lap. Like I'm thrilled about it, obviously, but this isn't a victory lap. I'm just reiterating that Walt Disney's up 50% since the fourth quarter, and it's not like that's just common practice around here. Walt Disney never does shit, as you can see here in this chart. So that's actually a big deal, is all I'm saying.
I would love it if this could return to like a growing, successful company that someone might actually want to own from a fundamental perspective.
I'm telling you, I was channel checking in December. I took the family, right? Was it in December? Yeah. I went in December. I was doing some channel checking. $12 hot dogs. They got some racket going on. $300 at the Bippity Boppity Boutique.
Spencer, I don't listen to these earnings calls or pay attention at all. There's just not much here for me. Why don't they spin everything off? Does that get talked about?
Oh man, that question is there's such a history of that question, right?
That's the common sense, like knowing very little about this, but they do have a couple different departments or revenue streams. Why not separate them all?
So it does seem like they are slowly moving towards like a one day ESPN spinoff, right? Because ESPN is partnering with not all of the, but several other
my whole life, they've been
streaming platforms to
spinoff.
They're going to do like the ultimate sports streamer, right? That's going to launch later this year. So it does seem like maybe they're moving towards that. That was the question of the year on like 2018, I think 17, like just spin ESPN off, and then Disney Plus kind of distracted everyone for a while. But yeah, it's a good question. I don't know. I don't have an answer. They're a content company, and they own, you know, basically a dying business in cable television and broadcast TV. They own ABC, they own ESPN. These are dying businesses, so
You know
they got to
what?
figure out what to do with that. For
The
sure.
way they report drives me crazy too. They keep changing like their revenue categories. So
I mean, I think they're done for now. Yeah, they did change it recently, where they broke it down into 3 segments. There's the park segment. There's the like the content
I
licensing.
remember always as parks, and then the content, and then wasn't studio separate at one point?
Yeah, but now it's not. Studio is now within that content. And then there's the streaming operations as the
Now
other
it's just
segment.
entertainment, experiences, and sports.
Right. Yep.
Even their reporting is woke.
I don't know.
Financial statement line items.
Yeah.
Dude, they fired like so many people. I kind of miss Van Gundy. Not kind of. I do miss Van Gundy.
Again, I'll
He was
just
a great
reiterate,
color guy.
the best part about watching Knicks games right now at the Garden is getting to see. Last night it was Allen Houston, Larry Johnson, Stephon Marbury was pumped up. They're all there. While Clyde Frazier was sitting with Marbury.
No, I know, but I liked Van Gundy's color
know, yeah, I miss
commentary
him
in the
too.
games.
I miss all of the 90s Knicks.
But what, was he too expensive, Spencer? Is that the sitch? They got
Is
rid
what-
of all
sorry,
the
what?
expensive. When they
Van
got rid of
Gundy
Van
is
Gundy,
the
was that because he was too expensive?
I never really know why they decide to lay off certain people, right? Because everybody is expensive, so I don't really know, how that goes. Talent costs money.
He was good.
Anyway,
and
yeah,
he was real.
yeah,
He would give so much shit to the refs too.
he was probably too honest.
Maybe.
Maybe.
The
Let's-
last minute of the game last night, they got to figure something out with these replays.
Mhm.
Take a half hour to finish a game.
Yeah.
Yeah.
Replay.
Let's move on. Let's talk about Palantir here.
Please.
Good earnings. Good on the top. Good on the bottom.
Was it good? Was it? Tell the market. Somebody tell the market.
Guidance was a little light. The top end of their range that they gave for the Q2 revenue guidance, that was the estimate. So basically, they're saying best case scenario will come in at the street's estimate this quarter. And for the full year revenue guidance, that was also the high end of the range they gave was just below the street's estimate there. So you could call that soft guidance when the high end of your range comes in at the estimate. Anyway, good earnings, soft guidance, stock down. What is it down this morning?
12%.
Thank you.
I think that's
So,
right.
so what that means is it's back to where the stock was on Thursday. Today is Tuesday.
I mean, you keep making these points, but still, there's other companies that are up a lot, reporting good earnings and jumping up 10, 15, 20%.
Strazza, this thing
Not okay.
Palantir was up 10%, 13% going into the report, and it just gave it back. Not a big deal. It's back to where it was on Thursday. All I'm saying is that I don't necessarily think it's a bad thing for Disney. I don't think it's a bad thing for Palantir. Market got a little ahead of itself. It's giving some back.
Yeah, I'm not standing up here saying it's the end of the world, but I'd rather the reaction be higher. No?
I mean, I guess I don't have a say in the matter. For Palantir, it's more like that 20 level is the big one. It's just dancing around in this choppy mess in the 20s. Like 20 is the bigger level there. It's still above that. It ran into earnings, gave it back. I mean, it's just let them dance. I don't think it's a big deal. If anything, it's a good thing because now the stupid earnings is behind them. You see, in cryptocurrencies, you don't have to worry about this earnings crap.
This is a $60 billion company that makes, I don't know, $2 billion a year in revenue. So it's not cheap. You're paying up for the future in this one.
Yeah, but isn't it like, shady software, like, whisper, hush, hush, secret, like in Spanish, secretico, like there's something like, mysterious about it. So there's like an element of like, that mysterious premium added to the right because you don't know what's actually going on back there. Isn't there an element of that?
You're still paying 25 times sales for it, which is steep, no matter what it is. But yes,
I mean, I'm paying $22.50 for it.
Yeah, which would be 25 times sales.
If you were one of those people who do, speaking of brujeria, that is brujeria.
This is just really high
Hey,
level
price.
the napkin fundamentals. Hey, this is not a value play. I don't think it's ever going to be.
I'm with James. This fundamental stuff is brujeria, James. You're right.
Good.
Spot on. Spot
Listen,
on.
I don't like it either, but sometimes you got to.
Brujeria is like, all that witchcraft stuff in the Caribbean, like they got all their, I mean, you're in Key West. You don't need me to tell you. The Cubans do it. The Haitians do it. They got Puerto Ricans that do it. All kinds of brujeria down there.
What do you guys do? What is that? I've never heard of this.
What?
Is it? Brujeria? What is that?
Brujeria is just Spanish for witchcraft.
Oh.
Yeah, but like Cubans have like santeros that dress all in white. The Haitians have their thing where they like burn the goats.
Yeah. They have all sorts of museums and stuff for this crazy.
Right, exactly. Yeah. It's pretty cool, actually. I had a friend whose his father was a santero, and we weren't allowed in this one room for whatever reason. And then I walked into the room, and I was like, "Oh, that's why we're not allowed in here." There was like a statue with like this naked guy with all these like plates of beans and like all these foods.
Yeah,
freaked me out, man. I was little. It freaked me out.
I try not to listen to too many of these stories because I get pretty freaked out too.
You're in Key West. There's a lot of that down there because you're very close to all these islands that do all that witchcraft.
Todd likes a good empanada. All right.
Well, it's hard to find a bigger gringo than Todd Sohn. So in that, why don't we bring him in here?
He's probably trying to talk about the House of Mouse with us.
Ooh, all right. Let's see it. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Todd Sohn, leading the league in stock market TV appearances.
I'm honored.
Is that what you and Chris Verone flex about? Be like, yo, when was the last time you were on, bro?
Yeah, every day. I walk in with a scoreboard.
Todd Sohn.
Todd goes out to
the league in appearances down at the Mendoza line for internet connection.
I have a 9 out of 10 on my screen here.
Where are you?
Are you in my? I'm in my cave of an apartment.
No, so you're not in the office today, huh?
No, I got to watch my little one in a little bit.
How many days a week do you work from home?
0 to 1.
Got it. Do you wish you worked from home more, or you'd rather be in the office?
No, I got to go in the office. I don't mess around with home.
You're one of those guys.
Yeah, I can't do it. I'm in a little office, and then I'm in my apartment. I got to get out of here.
Listen, nobody feels bad for you. You're on the Upper East Side. It's beautiful. So.
I'm living such a tough life here on the Upper East Side.
Yeah.
The Met Gala was last night. It was good. It's kind of like the CMT Symposium.
Kind of like that, right?
So
the CMT Symposium definitely has just as many women. Right? For sure.
And the outfits.
It's definitely not all dudes.
I wore DeMarc to the Met Gala.
Oh, did you? Nice.
So you didn't do enough Disney trips this quarter for them to beat earnings?
Yeah, what do you think about that, Todd?
I was at Disneyland in February.
All right, so you
no
can
Florida trips
did you
recently. The parks though are doing all right. It's this freaking streaming that's a disaster.
Yeah,
and cable's always a big mess.
Tell Spencer, make them all separate.
I mean,
Todd, stock's up 50% since the fourth quarter, right? Give a little back. Well deserved.
It was set up for disappointment, I think, at this point.
Yeah.
Is that really true though, guys? Like a stock can be up a lot and have some nice, short-term momentum.
Yes, but Disney never goes up.
Positive reaction.
Yeah, but Disney doesn't go up. So the fact that it went up 50% is like a lot for the stock.
A low bar for your investment.
Low bar. Yes.
Low bar. Yeah.
Yes, low bar.
Right.
Mr. Sohn, sorry to keep putting words in your mouth. Why don't you tell us what's on your mind?
Let's see. Tech, Japan, China. Those are the main topics.
All the usual suspects that I assumed you'd be interested in. Tell me about fund flows.
Yeah.
So let's see. What do we want to start with? The market still loves tech. There's no change from that. It's been right. That's okay. It's maybe a little bit of something I'm mindful of into the summer, and you've seen some softness from tech on a relative basis. And there's not much interest in anything else. financials, energy, industrials. I'm amazed that it's just all on tech. It's all on Mag 7.
So
Right.
is that normal from a fund flow perspective, though? Like how unusual is that? Is it? I feel like not knowing tech is probably usually the leader from a fund flow perspective.
Yeah, I mean, it should be because it's the biggest sector, it has the most products. It's the biggest, it's typical and it's outperforming. But I think the spread here is really odd that you've had whatever, depending on when you use your starting point, however many billions in the tech products, and then the rest of the sectors are negative, right? If you start at the Fed pause, flows to some of the more cyclical sectors are still negatives. That's kind of strange to me. Yeah, I love that there was this big inflow to Mag 7 from our guys at Roundhill. I think that's a good, it was a small relative to the whole industry, but kind of speaks to this preference for these big cap tech names, right? It's just a little bit of an interesting anecdote. I mean, it's great that that fund is growing and it's clearly getting used more. But it also just speaks to this preference for tech, right? And so listen, flows are not a signal. But if I'm trying to figure out what are my risks for disappointment, that's one of them.
Shout out to Roundhill.
Roundhill is great.
They're very creative over there. They're a smaller shop.
Yeah.
Less bureaucracy, and they can move fast on things. Love that.
All right, so say more about tech. So this is kind of something that you're not going to overthink, the fund flows right now. Technically, you guys still like tech, right?
Yeah, I think you have to until relatively it's cracked a little bit, right? But you still look at Nvidia. Nvidia is still strong. Microsoft's hanging in there. Apple's the kind of the big one that I think we're all aware of has been a laggard. Is it not? Is it a little thinner than it was, say, 12 months ago? Yeah, but it's not as bad as some other corners out there, like the staples are, like healthcare has been.
Right.
So yeah, I think you just ride it for now, but there is risk into the summer. There's disappointment risk, especially you got Nvidia in 2 weeks here. We'll see how that goes with the earnings play.
Is it the most important earnings release in American history?
Since the last most important earnings release 3 months ago. I'm curious, like you look at a name like AMD, right? That got hit. It's consolidated here after getting really stretched. How does that look going into June, July, August, right? Does that respond here, or do you fade it and it rolls over? Then I think you start to get more clues, right? I think you're getting a lot of clues.
That AMD's got squeeze written all over it.
So what we've done, Todd, is we've taken a list of charts that look like AMD. We've made a list, and we're basically just flipping them if they're above or below their prior cycle highs and keeping track. Because there's so many charts.
I think you'll get a lot, like a chart, a study like that. I think in the next couple of months we'll get a lot of good intel on the market, right?
Right.
We've responded here to the little oversold condition recently. What does the participation and reaction look if we go on to make new highs? Is it going to be thinned out, or is it going to be all in again?
Is it safe to think or say maybe we should err on the bull side here, because coming off, I don't know, oversold readings in some of these indexes and sector indexes, in the context of a bull market, I would expect a sharp little snapback move at least.
Yeah, you got oversold in an uptrend. Right. And you came off of a major 5-6 month move. You're going to get a pullback. Maybe that was it. It's, low vol is not impossible. It can persist. And now I think you just have to pay attention to what participation looks like.
I mean, I look at something like the Russell 2000. If we're green today, 5 straight up days, at a certain point, the correction's probably behind us. No, I think we're close.
This is what we were talking about before, guys.
Yeah. Like this will be a good tell on. I think AMD is a good example of what risk appetite is into the summer.
Yeah.
Rally all the way back to the highs, or does it fade and you crack that 155 or whatever you have highlighted there, right?
Yeah.
That's a good sample scenario. There's a bunch of other semis I feel like that look like that to an extent.
ASML, Taiwan. CrowdStrike looks like this. ServiceNow looks like this. There's so many names that look like this. And the indexes too. We go right on down the line with the indexes. We got a list of 20 indexes, but not just, Bitcoin's in there too, but NASDAQ equal weight tech, all country world index. They all look like this. So
yeah, I think it's just, it's a pullback and an uptrend. if things are going to deteriorate, we'll learn that pretty soon. There's no other way to spin it.
Hold on. Can we get back to these fund flows? Because you made an interesting point there, Todd, where you were tweeting it out, I believe, and how the China ETF has more total inflows in AUM.
Yeah.
Can you talk about that a little?
So the terminology is cash burner, right? What products take in more cash but do not grow your investment?
ARK
is one, because it took in so much money during 2020, 2021 and has not recovered.
Yep.
Long vol. People always buy vol for protection, and usually, if you can time it, great. Long duration bonds now with this major correction, and China. So China has taken in more money than it has AUM across its ETF products. It's burning investor cash.
So what, like FXI, KWeb,
FXI, KWeb, MCHI,
CQQQ.
So they're all that
ASHR.
Those are the big three, basically, Todd? Or is there another one?
Yeah, KWeb,
MCHI.
FXI, MCHI, the kind of the ones I would queue off.
MCHI.
And I think we can all make the case that China might be a short-term buy here, but in the long term, it's a disaster scenario. It's the HGH of ATS, right?
So
volatility of it.
From a supply and demand dynamic, what does that have any impact? Right. So are you basically saying that because so many people are underwater that they're more likely sellers in the future? Like, how does that impact the future?
I think the idea around China was that it is uninvestable, right? That was the kind of the story, the narrative, and it's been proven right over these last 2 or 3 years.
Mm-hmm.
But you take that along with the recent flows. There's been a lot of selling of China ETFs. A lot of funds have closed, and that creates an interesting sentiment backdrop for like a quarter. But I would not overstay your welcome. So I went through. I looked at what the average China rally is over the last 30 years, and it's about 77% over 170 days. Huge.
Okay.
Then following those rallies, you get a decline of about 50% over a similar duration. So it gives it all back.
Yeah.
So if you can time those rallies and be good enough, some of the folks here are, and some of them like me, I don't know, maybe you can't time it. Go for it or use options. But China is not a long-term investment. I would not put it in your portfolio like I would like Japan or something like that.
We've been doing a bet over the last few months of the what if China doesn't go to zero trade, where we've actually been buying January calls over the last couple of months.
Yeah,
basically, essentially, they were cheap as hell. Premium was so low, they just forgotten about. Obviously, the trade has been working, but would you consider January calls a long-term trade or no?
No,
That's
I'm talking
the time frame that he stated, more or less.
Yeah. I mean, I think that's fine. I'm talking like 5 to 10 years in your friggin' asset allocation.
Todd, I love this point. I think it's so important. JC, this reminds me of last week when you were doing the conference call and you went through 30 charts of international averages and indexes. Right?
China doesn't look like the others.
And we said, wow, look at China. As much as we were actually saying something kind about that chart for the first time in a long time, it doesn't look like the other monster bases and new highs, right? Nothing like it.
Doesn't look like Denmark.
It looks like decades of opportunity cost.
It's opportunity cost, and it's just mean reversion to me right now. And it can be crazy, sharp mean reversion, major mean reversion. I feel like options were basically created for China. Just taking low risk, high reward
for China. That's a great quote.
Yeah. You pay your premium and you see if you hit the lotto ticket.
How about this one, Todd? Because I know you love sentiment and I know you love like inflows and you follow all this stuff. How about the performance of these ARK funds since they dropped that satirical video making fun of value investing? How are we thinking about this? Is this just another classic, what do they call it?
Anecdotal data. I remember that, and it was like, wow, they're going for it.
It was funny, to be fair.
It was really well done.
Yeah,
I will give their credit to the marketing team there. But when you take that with the flows they were seeing and some of the messaging around the money tree, I think that was the nickname in Korea. I don't know if you knew about. Did you know about that one?
The money tree.
They called Kathy Wood the money tree, I think, in Korea. Something like that.
Case.
Google that when you get a chance. And so you take all this together, and it's like, all right, we're way off sides here now. This is a great chart. I like it. And clearly, there's other variables at play, like interest rates.
Sure.
Surging higher. But, I mean, this is where sentiment
Nobody
comes
said
in.
anything about interest rates in that video, though.
I know. Yeah, you're right. I have to rewatch it, but I do remember that.
I just did. It was awesome. We all loved it.
Yeah, like the bank. It was some banks and boring and all that stuff, right?
Yeah, they show like Sears, like an empty parking lot. You know.
But what's sentiment now for these stocks?
Nowhere near where it was 3
China.
years ago.
It's in the China category.
Yeah.
People laugh at these indexes now. I think that's important sentiment.
I don't know when these.
We're laughing at them now.
I know you are, and I'm
number one. Warren's still the GOAT, by the way, on this chart.
Shout out Uncle Warren.
Warren's the GOAT.
But Todd, hold on. Back to China. Isn't sentiment at this is crisis level sentiment for China?
Yeah, I agree.
When I started my career, it was like they were the play. You had to be emerging markets. You had to have China exposure. It was such a big deal. The story was so bullish, right? Now it's like nobody wants them. They're uninvestable. You can't own them long term. We say the same thing.
Yep.
I just think that kind of sentiment makes me think, I don't know. I might have to change my mind on this one.
The sentiment is there or was there. I think it's starting to perk up now.
The India EM weighting is a part of that sentiment.
Yeah,
crazy how that's moved.
Yeah, it's
but do you want to fade India though?
Kind of.
India is like tech, where you just ride it, and over time it may thin out. Here, that's kind of how I'm thinking about it. It's just it's still an uptrend.
Yeah. No matter how bad the rest of the world is, India keeps going up.
And their charts do look like large cap tech stocks.
Yeah, it's just like the same thing there. And they have.
And then look at the Bank Nifty. Look at their financials index. That's probably a great heads up.
Fonz, throw up the India-China ratio.
Look at their small cap index, Indian small caps. If India's going to roll over, you're going to see it in the Indian banks and you're going to see it in Indian small caps, and you haven't seen it.
New leadership. China's coming for their weighting.
For the record, you could change that denominator to the United States stock market, and it's going to look the same. It's more of a numerator fallacy there, Strazza.
Yeah, fine. But this is the two biggest EM components. That's why it's...
The other one is, if you look at what Crane Shares has been doing with their lineup, they closed a couple of China funds, and now they're launching non-China ETFs.
Yes,
that's another sentiment tell.
So many.
They're coming out with a Saudi focused fund. So, okay, let's.
And Todd, I'm sure you see this even more than we do. People literally removed their China exposure, fund managers, and put it in India.
Yeah, they had to.
You don't have to put it all back in China, but maybe some of it. I just think there's incremental buyers for China.
There's a lot of, luckily for us, if you're a large company, I think there's a lot of, red tape maybe involved with adding China exposure back,
red tape. Here we go.
I don't think they want China exposure because the government there can say, all right, let's make Alibaba disappear. And that's too much risk for some people. Strange.
It's crazy.
Dude, so we're back to ARK, though. The money has not returned there at all, despite having a decent last year or some rallies, by the way.
So the flows are net positive, but they're just not what they used to be at all.
No, well, they're net. You go back to the high in February 2021, they've had about $10 billion in outflows across their products.
Really? How about more recently?
More recently, I don't know off the top of my head, probably mixed.
Okay.
But I keep queuing off of this chart. I'm waiting for that bottom line to go back up. It's just nothing there.
So speaking of just a drastic change in sentiment, you go back to 2020, these stocks were all the craze. People couldn't buy them fast enough. These ARK stocks, speculative stocks.
Innovation, disruption.
Yeah, right. Yeah.
Growth, high beta, and then it all came, it was the tech bubble kind of part two in a way.
And these were, using Ari Wald's terminology, these were the sector culprits, right, JC?
Yeah, Chinese internet, ARK, biotechs.
These guys peaked first. They peaked first, early 21.
They liked the 0%, stimulus type market that we're in. That was perfect for them.
Yeah.
And then when that rug got pulled, that was it.
So is the fact that this, the reversals in ARC haven't quite resolved higher in small caps too, in biotechs, how much does that tell us about the future, level of interest rates?
I guess high for longer, whatever you want to call it.
Right.
I don't have any edge on what the Federal Reserve does, but it sure seems like rates are just kind of going to chop around. I don't know if I don't have a great direction on rates right now. 5 and 4, range bound, until I see something meaningfully different.
Yeah.
But those stocks tell you that rates aren't coming down anytime soon.
I think regional banks is in that category too.
Perhaps regionals at least are a little bit more timely than some of these ARC names, right? They're hung in there.
Yeah.
Big banks are okay. They're okay. Maybe not the sexiest of names, but I don't mind those. Capital markets still good.
And then utilities, at least recently.
Yeah, can you talk about little utilities? Took the words right out of my mouth, Strazza. Utilities making new 12-month highs.
Yeah, utilities are curious because they've outperformed as rates took this one leg higher recently. Right.
Yeah.
Right. So to me, that kind of coincides with the pullback we've had, a little defensive posturing. That's different. That's the most notable clue right now. So if the market resumes higher, do utilities keep outperforming? That's an interesting question then, and clue that maybe things are getting more defensive. I will say about utilities though, I've looked. If you look back at Dow versus S&P with recessions overlaid on them, utilities stink during recessions. It's totally hit or miss. So. And that's prior to and during the recessionary environment. So on one hand, I think it's interesting that utilities are outperforming from a defensive posturing standpoint. But on the other hand, I wouldn't read that into saying the whole world's going to fall apart.
Look at Nextera. NEE it trades like a meme coin.
Well, I think the other thing with Utes, and I'm not a Ute guy, but there's nuclear talk about it, right? That some of these will benefit from nuclear power. And that's clear. You look at the uranium stocks, they're on fire. Uranium itself is great. And I think that's sort of leaking into some of these utility names.
The NEE looks just like Disney did in October. This like not a top, that NEE big, massive top, but that ain't a top.
I got to talk to Steve about this one. Speaking of big tops with Pfizer.
I love it.
Listen, I agree with you that Pfizer's interesting here because it's been so bad.
Yeah.
But if the stock goes down 60%, is that not a top?
Oh yeah. So it depends on your time frame. I talked about this, Todd.
I saw that.
Yeah. So the top is probably, you could argue, completed at like 45. When the stock rolled over. But is this not some sort of massive top too?
I mean, it can be. It may as well have been. But the stock went down 60%. That's a top to me. Now, maybe we're done and you can buy it now.
Mm-hmm.
I just did not like the not a top comment, Steve.
The wade's drawn here. Not a top.
Well, that was a top. The question now, is this the top, right? So like Apple was a top last year. Does that mean it's the top? Tesla was a top. It's lost 60%, but is it the top? Like throw up the new slide, throw up Nextera.
Yeah.
Obviously it was a top. It's massive decline in Nextera, but is it the top?
If it's the top, does that mean the stock just doesn't work for the next 20 years? Is that?
It means that this top completes. Yeah. You break down and you have another leg lower that gets cut in half again or so.
Yeah. Okay. I don't know. That's too confusing for me.
Like Disney was the same thing in the fourth quarter. Was it the top? We know it was a top, but it was the top, and the bet was that it wasn't.
Is this not just we're talking about how market fractals? Like Micron had a massive base, but if you didn't zoom out enough, you still thought it had a massive base going back a few years. Bases and bases, tops and tops. Listen, Todd, there are no rules here. I think the idea with some of these, blue chip companies, Disney looked this way, I don't know, a quarter or two ago. I think the idea is you can just buy support, buy old lows and make the bet that you're not going to get these massive breakdowns in the context of a bull market. Over shorter time frames, examples like Apple, I guess Tesla. Just I like the idea of betting on these not being bearish patterns.
I agree. Yeah, I can work with that. I agree on that one.
And Pfizer's like, you're right. What, down 60%, pays like 5% yield now?
It's a low bar for the one thing. So Pfizer's a really low bar, and I cannot get my head around healthcare. It just refuses to work, even though there's major outflows from healthcare ETFs, right? So I like that. And then healthcare's relative performance has been so bad, it's now in the so bad, so good territory.
Yep.
And it just refuses to work as a whole.
Is that risk on or risk off information or neither? Healthcare relative.
I think neither, because it's such a diverse.
Okay.
Biotechs.
Don't even
Vertex, Regeneron, and you have Pfizer and Merck. The more risk on would be the genomic name, so ARKG and iDNA.
Yep.
That's a better tell on the market environment.
And they've been terrible.
And those both have been pretty rough. But it's just I just can't get my head around healthcare. Like there's some good stuff and some bad stuff, and it cannot work as a sector overall.
I know, but Todd, isn't there just granted as a sector it's not working, but can you just almost always argue that there's something good in there and something crappy in there? Like almost always.
Yeah, for healthcare or for any sector.
Well, especially for healthcare.
Especially for healthcare. It's just amazing to me that the relative performance is not cohesive. But yeah, it's such a diverse sector. There's always going to be good and bad, but usually the relative performance will go along for the ride to some extent if there's more good.
I mean, what do these managed health companies have anything to do with these little tiny biotechs, for example?
Yeah, but none of them really look good. Like the only healthcare indexes that look okay right now are the ones that are cap weighted pharmaceutical because they have all the
Merck and Lilly, right? I mean,
Merck and Lilly and Novo.
That's the one kind of head scratcher for me. I just can't get my finger on it. Strange.
And doesn't that speak to, like, if you're going to be in the healthcare space, you're better off being in the industry groups than the sector. You're better off in being in individual stocks versus the sector.
Yeah, healthcare is perfect for stock pickers and whatnot.
Yeah.
Because
discretionary is like that. Industrials somewhat like that.
Industrials with what? Transports have been pretty junky. And then discretionary restaurant. The restaurant, can we talk about the restaurant stuff going on?
Oh, yeah.
Please.
Right. So McDonald's and Starbucks have kind of blown up. But then
Texas Roadhouse, bro.
Texas Roadhouse, Wingstop, Cava. I like Cava. I'm a big Cava fan.
Oh, do you eat there?
He likes the Cava.
Hold on. Do you like the stock or do you eat there?
Both.
Stop. Really?
Fast casual Mediterranean?
Dude, you don't have enough good shit in New York City that you're ordering Cava?
Hilarious.
This is what happens in dad life. We're getting Cava tonight.
Dude, you live like you're like a half-ass excuse for a river from Astoria. No?
Not happening.
Like you could like spit to Astoria from where you live.
Yeah.
It's like one of the largest Greek populations on planet Earth, maybe the largest outside of Greece, if I'm not mistaken.
A lot of them.
You're ordering Cava?
Love Cava. Well, during the work week. The weekend's different.
What do you get?
On the weekend, it depends. I made a venture to Petey's Pie last week or 2 weeks ago.
No, what do you get at Cava?
Oh, chicken and rice. With all the toppings.
Like kind of like one of the street vendors?
Yeah, but double the price because I want to pay up.
Dude, I love good street meat, like in New York City. It brings me home. Like, yes, can I afford a good meal in New York City? Yes, but sometimes I just want to pay $5 and sit on a grimy floor and eat my gross.
Why pay $5 when I can pay $15 for the same thing?
Brings me home. It takes me back, Todd.
Nothing says New York City like the lunch options. Different.
Dude, and even late night, like I have like these vivid recollections of like walking out of a club at 2:00 in the morning and eating what I thought at the time was the greatest gyro in the history of.
Yeah.
I think you guys should stop discussing food, or people are just going to stop taking you seriously with your street meat and paying up for kava. I mean, this is terrible.
I don't think the chat likes the kava comments.
Well, no, actually, we've been looking for like a good boots on the ground review of this one.
You're the first person to come in here and says it's actually good.
I don't mind it. Like, is it amazing? No, but like, I think it gets the job done.
You love it.
Is kava better Mediterranean food than Chipotle is Mexican food, or does the Chipotle do the Mexican better?
No, I'm a Dos Toros guy.
Ooh, now you're talking bougie New York shit.
I don't know.
That's food. You're a Dos Toros guy. They got Dos Toros in the Upper East Side?
Oh, yeah, they're everywhere.
Because they used to be just one in Union Square, I remember.
Yeah, no, they're everywhere now. They're huge.
So we can't start talking about food because then just Spencer's not even here to stop us. I can't believe he's letting this go.
So the restaurants. So you have Starbucks blowing up. Kava's good. Chipotle's good. Texas Roadhouse, Wingstop.
Texas Roadhouse is great, man.
Maybe people just don't like McDonald's and Starbucks anymore. I don't know.
By the way, also, Wingstop is a young aristocrat. Wingstop's been increasing their dividend for how many years in a row now? 7,
Wow.
Strazza?
They're killing it. Yeah, at least 5. I don't know if it's been 7. The point, I think the point Todd wants to make is that if you don't look at just the largest components in the restaurant industry group, there's a lot of strength beneath the surface.
Yes.
A lot of these
this is one you guys can make. There used to be a restaurant ETF. It was ticker BITE.
Yeah.
And it was an equally weighted index and ETF.
It's gone?
Gone. Years ago, it was gone. And I've wanted it to be replaced forever because McDonald's and Starbucks skew the whole index so badly.
Yep.
So I'm going to leave it up to you guys to make the all-star charts.
No, but these equally weighted restaurant indexes is tough. It's like an equally weighted biotech index. Like it's just going to have a hard time, I feel like, because there's so many differences between one biotech and another, just like there's so many differences between one restaurant and another. You know what I mean? Like to have an equally weighted basket, like
we're making tiered.
That in and of itself skew the data. Like, don't you want it to be market cap weighted? You know, reward the more successful ones. How do you think about that?
I get that, but I feel like in this case, because there's always this consternation if McDonald's is weakening, it's like, oh, and QSR, Burger King is weakening. Oh, the consumers.
Then why don't we do a market cap weighted restaurant index sub 50 billion, sub 30
maybe that,
billion.
either that or you tier it so that the biggest weights have a certain weight that's capped.
Right.
And so I want to know what small cap restaurants are doing, because that could be a better tell on random consumer strength, how the consumer's faring in the friggin' Midwest or something like that.
There's just such a difference between restaurant to restaurant. Like we talked about it. You just mentioned a whole bunch of crappy ones, and we mentioned a whole bunch of great ones. Night and day.
Yeah. So I don't know. I just hate when we read too much into what McDonald's and Starbucks are doing.
I agree. I'd rather look at a Kava, or I'd rather look at Texas Roadhouse or a Wingstop.
There's a few other random ones out there that are.
What about Eat? Right, that's the Chili's.
Chili, right?
Yeah,
Darden's another one that's a little iffy. I forget what they like. All
because some of these publicly traded stocks are essentially an index of restaurants in and of themselves.
Yeah, I mean, QSR, Burger King, Tim Hortons, something else in there.
Right.
But
they love Tim Hortons in Canada, bro. They love them.
I'll be there. I'll be there in 2 weeks up in Canada.
Where?
Toronto and Montreal.
Cool.
You going to Blue Jays game?
The Jays aren't going to be in town. I was hoping the Leafs would still be around, but they are out skiing.
Dude, they can't get anything there, man. Dude, these people in Toronto want the Leafs to be so good, so bad, and they just can't. I know nothing about hockey, and even I know that.
Okay, yeah, me neither. I was just hoping that they would be around for a game, because a playoff hockey game would be sick.
Big fan of Toronto, man. Have fun, dude.
Oh, amazing city. Highly recommend everyone go visit there.
Good eats. Speaking of which, good eats.
Pretty decent stock market recently. Canadian banks maybe starting to turn. We'll see.
All 4 of them?
All 4 of the names. That whole index is energy, 4 banks, and Shopify.
Yeah.
That's right. That's
and
right.
gold, I guess, too.
BlackBerry's not around no more?
It's still around.
Wait, one more. Okay, this is actually a good point to the ARC stuff. If you go back to the meme thing, BlackBerry was part of that. It's not part of it this time. It's another difference between sentiment today and 3 years ago.
True.
For whatever that's worth. Just throw it out there. BlackBerry tripled during that crazy phase.
I participated in that. It was fun. That was
there you
my
go.
meme stock was BlackBerry.
Yeah.
Good.
So
I love that Spencer had a meme stock.
BlackBerry was
meme
going to be the like IoT. It was like IoT for cars. They were like going to be like the software in your car for everything.
Nope.
I don't know.
No.
So much for that. All right. GameStop.
All right. Thanks a lot, Todd.
All right, Todd.
Bye, Todd.
Always
Great.
a man.
Thank you guys. You take
Appreciate
care.
All right. Enjoy Canada.
Speaking of meme stocks, let's just stay on this. We have the GameStop chart, right? We haven't seen a move from GameStop over 1 or 2 day period like we saw last week since the craze.
I feel like I spoke too soon. I think I said this on Wednesday, maybe Thursday.
Look at this. What a monster. 51%, 2 days.
I think we were talking about the lack of a broad-based move in meme land, and this is clearly proving otherwise. So
I still, it's still on our freshly squeezed list. It's still a bit mixed, but they're squeezing, right?
Mm-hmm.
I think the list is getting longer every day of the green ones. This was a monster move. It's just, I thought when you run the rate of change this way and you think back to 2020, 2021, way to the left of the chart, last time we saw this kind of upside volatility, makes me think, okay, where are we headed, right? We're talking about ARK stocks aren't working that well. Chinese tech starting to work. Small caps, still haven't completed a reversal. I think of, okay, those stocks remind me of 2020, 2021. They were the leaders. I start to see this kind of action from GameStop. Carvana's ripping, crushing their earnings report. That was a good report. Things are coming together. Report. The animal spirits are slowly creeping back into the market is what I'm seeing. And this is a part.
Don't worry about that. No. The animal spirits, it's not that they're creeping back into the market. It's that the animal spirits are coming for the high short interest, right? I think it's more specific to that. I'm not disagreeing on the overall market and the implications it has on that. But I think the bigger story here is that they're coming for these. The poster child, which you talked about, Carvana, absolutely ripping. You're seeing in the GameStop. You saw the Donald Trump thing double. I mean, it's a theme. They're coming for these. But what are the broader based implications of that? It's probably not a bad thing for the market, but I'd rather overthink that less and focus on these.
That is just like standard bull market behavior, though. Like you said, the animal spirits are coming to squeeze these heavily shorted names. They're not doing that in bear markets. This is bull market.
But they're not doing that. But they're not doing that in bull markets the entire time. Also,
no.
So it's hard to. I don't want to overthink the implications of that market wise. I agree with you. It's not a negative. How bullish is it? It's like, maybe another bullish. I think the bigger deal is they're coming for these names. We should focus on these types of names more, is all.
The implications are simply that these junky vehicles can offer some awesome long opportunities.
Yes.
A couple of months or quarters. Those are the implications that I care about.
Because
when these stocks go, you can play them through options. You can just play them through the common. When they go, they go. They're great for traders. They're excellent vehicles when they're trending. It's been a pain in the ass having, speculative tech just stuck in a range for 2 years. Hasn't been any fun. So I like what I'm seeing. We'll be talking more about these names for sure. Just like we said, we're going to be talking more about China. It's happening.
It's happening. Yeah. You know what? You could probably throw in China in some of these high short interest names.
Yeah.
Because they're in that same sphere,
They have similar.
Do you throw ARK in there too, or they just suck too much?
What do you mean? No.
So we're talking about high short interest names, short squeeze names, Carvana, GameStop, China. Can you throw ARK in that group? Can you categorize them together?
For sure. They have a ton of heavily shorted names. ARK. Yeah.
It's just that these ETFs, but wouldn't you rather be in some of the individual names within these ARK ETFs than being in an ETF?
Yeah. But you could start at the ETF, right? That could just be your world. Then you drill in.
Yeah.
Listen, what we do, we take all of the ARK funds. There's a lot of them. That's a big universe, right? A lot of them look terrible, like we were talking about with our guest yesterday. But you'll find ones that you really like. And again, last year, it was a sea of red for these ARK holdings. And then Coinbase is in there, like the shining star. So it's a place you want to look still, because
I think you're better off. I think you're better off at the individual stock level, stock pickers versus, trusting their portfolio managers over there that clearly cannot be trusted.
Listen, a time and a place. Do you agree with what I was saying yesterday? They're moonshot investors. They're investing in a way where a lot of their holdings are probably going to go away and not make it. But the ones that do can really make
Right,
it.
you're reiterating my point.
Yeah.
Go to the individual stocks because most of that stuff is crap, and they're going to hold down the ETFs. You're going to do better at the individual names. You're making my point for me.
On the leaders.
Yeah.
But you know what? And it's not even about ARK. Go get the small cap growth fund. Go get the IPO index, right? Go get S&P high beta or small cap high beta. Like you can find these in a different way too. If you some sort of
all
ARK.
the same thing. Strazza is right. Yep.
People do have this aversion to ARK. Have you noticed it?
A lot of them got burned. Most of the money,
I like it.
Most of ARK's inflows came after that rally.
No fund family has ever lost this much money for investors in human history. So I can see why some people are upset about it. Fine, but
she's been right about a lot of things over the years.
No, fine, but to Spencer's point, people are upset about it because they got smoked.
Yeah,
right.
China too.
What happened before that doesn't matter because, as you know, all these people piled in after the move.
The people who come on the TV and tell you China's uninvestable, they probably lost a lot of money buying China years ago.
Yes, that's exactly right.
All right, news. We got news. We got earnings. It's a Tuesday,
couple more.
Middle of earnings season. Pumped up.
Yeah. Well, let's talk about Europe here. Let's talk about UBS. London having a nice day. UBS is certainly helping that, I would imagine. Look at this. EPS 52 cents versus a 24 cent estimate. Sales also beat.
It's got to be a
this
special
company. Analysts thought that maybe UBS would make $600 million in profit last quarter. They did not make $600 million. They made $1.8 billion in profit. So they swallowed Credit Suisse.
What was the guide? What was the estimate, rather?
The estimate for the net profit was $600 million.
Yeah.
They made $1.8 billion.
There had to be there's an extraordinary item in there.
Well, the extraordinary item is Credit Suisse, right?
Right. Okay, fine.
Right.
So
and they swallowed it, and now we're good to go.
All right. Yeah. Listen, it's a great chart. Time to buy it was $5 ago, though. Right? It's great. This is such an awesome. This is a financial crisis-based breakout. Love to see it.
And it was one of the early ones too.
Citigroup, we wish these things upon you one day.
I don't give a shit about Citigroup. Why would I want Citigroup to do, why would I spend any time wanting Citigroup to go up?
I don't know. It's just a nice thing,
a nice thing for who?
As somebody who used to work in New York City, you'd think you'd have a little bit of empathy.
Some sentimentality towards
Citigroup.
You know what
I mean?
It's okay.
Those are the people you on the train with.
What about the short sellers of Citigroup? You don't have sympathy for them?
Why would I?
Why would I have any sympathy for shareholders of Citigroup? I don't give a shit.
I don't know.
Why would I care? Let it go to zero. I'm surprised it's not at zero, to be honest.
No.
I do think it was hilarious back in the day. The ongoing joke in our office was that the ATM fee at the Citigroup ATM around the corner was higher than it would cost you to buy a share of stock.
Those are the days.
That was a good one.
All right. Last earnings
that was near
I had.
The bottom, by the way. Speaking of
sorry,
sentiment.
Spencer.
Last earnings that I had was Datadog, DDOG, EPS beat, sales beat, guidance was good for the Q2 revenue and in line for the Q2 EPS. They gave full year guidance as well. Those numbers, revenue was good, EPS guidance was good, and despite all of that, we are down.
Unless,
what are we down today?
10%.
I've been in this one for too long. I'll probably be out today unless there's some sort of, insane intraday rally. But that's the way it's drawn. That's pretty much my level, gapping below there today. A lot of these data cloud names were they put in the base breakout and then they just like died. It's been straight sideways for months, and that's opportunity cost in this market. So, oh well, hasn't been the best quarter for this group.
It's just
No.
a group that's still stuck below those former cycle highs. And this one is one of the ones that are one of the worst ones of that group, right? So think about it. The software index is struggling at those former cycles highs from late 21. This one's nowhere near that. So not only is it in a shitty sector, it's in a shitty industry, and this is one of the shittier ones within the industry. So the fact that it's not doing great probably shouldn't be all that surprising.
I don't know
Right?
if it's a fair way to categorize it.
All right. No one said life was fair.
I don't know. I don't know.
It's a,
All right,
it's a laggard within a lagging industry group within a lagging sector.
Software is a lagging industry group.
Yes.
Okay.
Is the software index above or below the prior cycle's peak?
I mean, the more you know. Well, all right. Listen, I get it.
Aren't you the one who tells me that software is the most important industry group on planet Earth in the history of human civilization?
No, I tell you that they're the best stocks.
The
From a
best
financial
stock.
statement
Sorry.
perspective. These are not even, they're the best companies. Everybody wants to be a software company. There's a reason for that. There are fundamental reasons why everybody
Three
wants.
letters. Three great letters. Ready?
Give it to me.
A-R-R.
Yeah, that's right.
3 letters. Those are great letters.
Yeah, it's sticky stuff. They're the best business models in the history of business. That's
And
what
this
I'm
one
saying
just
about
can't
software.
seem to get it right. So
The best business models. We didn't even know these business models existed until we got the tech for them to exist. So the scalability of these businesses is ridiculous.
So again, the software index is below those prior cycles highs. Every major large cap index is above those prior cycles highs on a cap weighted basis, and Datadog is nowhere near it. So it's a laggard of laggards.
Even internet, yeah. Well, I'm checking my equal weight software here. Software infrastructure is like right there. My equal weight Morningstar index. It basically looks like, all those prior cycle highs charts. But yep, you're right. A lot of the other tech groups do look a lot better, and software applications look like Datadog at the index level. So, all right.
Yeah, look at this crappy Cloudflare, for example. What a piece of hot garbage this thing has been, huh?
Crap. Yeah. Listen, I think
Garbage.
These stocks on a watch list: the MongoDBs, Datadog's, UiPath, like you said, the Cloudflare. I would put these data names on a list. It's not time. The whole group is struggling here, so that's interesting. And there are things in software that are working. Go look at some of these cyber names that are still looking
Like
good.
Adobe's been one of the biggest capital killers in the market. Would you put Adobe in maybe one of these not a top situations?
I would put Adobe in I would. And also I would put them in that whole theme of, do you really think any of these mega cap tech or mega cap growth companies are not going to kill it with AI? Right. So for me, Adobe right now, it's a story of they missed AI. Just like we saw with Google earlier this year, it wasn't true. And we saw with Apple more recently, right? I don't think you want to bet that any of these mega cap tech companies miss AI. And I think that's the narrative for Adobe right now.
I got to tell you, if Adobe starts creeping above 500.
Yeah. Yeah.
And I'm here hating on software.
You have a nice hook there. So
Potentially.
Yeah.
Hey, shout out to FinTech today. Dave, ticker Dave.
Hey, Dave.
33% on their report. Good job, guys. All right. Should we bring on Patrick? Talk to our report? Let's do it.
Wait, Dave, what are you talking about? Ticker Dave? What are you talking about?
Yeah, DAVE, Dave. The company's called Dave.
DAVE?
DAVE.
Whose company is it?
Stock is
Dave.
ripping.
It's Dave's company.
I'm so confused. This is $500 million software stock?
Yeah, it's FinTech, baby.
Software stock. That's right. And their CEO is not named Dave.
Do we know Dave?
Who's
Dave?
I don't know if Dave is actually a guy.
No, Dave is not a guy.
Dave is
Jason
software.
Wilk is the CEO.
Dave is like a very ubiquitous sounding name. And so there are a lot of things that are Dave is a very common name for brands to use.
It's like a sexist Alexa. They're like, oh, we're naming all these robots after women. Let's name it after a dude.
I wouldn't quite say that, but
I think that's what it is. There are women that are all up in arms because they keep naming these robots Holly and Alexa and right.
All right. Well, Dave.
I like the guy with the Jamaican accent, right? You know how you could change the.
Anyway, let's bring on Patrick, not Dave, and talk about the chart report.
All right.
What's going on?
Oh, Pat, just doing it, baby. We doing it.
You doing it?
You're hot talking energy. Let's hear it.
Talking to energy, Dave. But yeah, no, I think that breakdown in crude oil last week was pretty significant. It kind of got lost in the shuffle. I mean, it was a busy week. You had earnings, you had the Fed, all that. Big breakdown in crude oil, though. It fell every single week or every single day last week. Kind of resolved lower from that head and shoulders. And it broke 82, which is a really important level there. And, people they weren't really worried about inflation until we broke that 82 level and crude started accelerating and rates started accelerating too. So now that we're below it, you got to wonder if inflation's, really as bad as we thought it was a month ago.
Tell me why.
I mean, crude below 82, no real support until like 68 down there. But what's interesting is if you look at XLE, energy sector, it's kind of retesting that breakout level and it's holding so far. So it'll be interesting to see, if it can continue to hold while crude is breaking down or what that relationship is.
Also, when you look at the New York Stock Exchange oil index, it looks a lot better than the S&P sector index, which is going to be a bunch of Exxon and Chevron.
It's holding better, you're saying?
Way better, because remember the New York Stock Exchange. Here, I'll throw up the news slide too, Spencer. Remember the New York Stock Exchange. 50% of the largest 100 companies aren't even from America.
Right.
So the indexes include companies from around the world. So in the New York Stock Exchange oil index, you're getting exposure to these Colombian energy stocks and European energy stocks and BP and all of these other names, Petrobras, right? You're getting names that are not just Exxon and Chevron. I think it gives you a much better perspective on energy stocks. Because remember, we're not just Americans, Patrick, we're earthlings.
That's true. But no, that is a much cleaner breakout and holding. But XLE is holding nicely too. So, we'll see if it can continue to stand up here. Other than that, emerging markets getting a lot of love here. I think,
Are they?
I got to see more on a relative basis.
I was going to say, because of China or?
Yeah, mostly China is driving that. But you got a nice breakout last week. I think it closed, new 2-year high on a weekly basis, something like that. But still, it's been outperforming maybe the last 2-3 weeks. But you look at that relative chart and it's pretty ugly. It's going to need a lot more work.
And what are people saying about these groups, Pat, out there? You do a lot of reading. You read more than probably the three of us combined.
I don't know about
more
that.
Analysis than most of us. What do you think?
I don't know about that. But
no?
In terms of what? Are you asking about the emerging markets thing?
Yeah, and energy, what's the gossip out there?
I mean, it really feels like these last few weeks, it's just kind of been on hold. We've been range bound in a lot of things, mostly stocks. And until you get that resolution, people are kind of just in wait and see mode for stocks. But that's why you're seeing kind of interest in the emerging markets thing. That hasn't worked in forever, and you're finally seeing it kind of start to work there.
Hey, Pat.
Hey.
But plenty is working in the world of U.S. equities now.
Totally, yeah. I really like that chart Sam had yesterday of what is it, the Global 100.
Yep.
It's got a lot of, the favorite U.S. American mega caps in there, but then it also has some of those foreign mega caps in there as well. I think Tencent and some other big ones. So you got the all-time high there. S&P isn't even at an all-time high yet. So
100 largest companies in the world. What an index.
Yeah. Yeah, I never really looked at that ETF before, but it's cool.
So just an FYI, the Global 100 index, as global as it might sound,
it's the
12% Microsoft, 10% Apple, 9% Nvidia, 6.5% Amazon, 7% Google, 2.5% Eli Lilly, Broadcom's. So I'm looking at the top 10 stocks right here. None of them are from outside the United States.
What a great momentum strategy.
Global, 40% of the index is technology, 11% consumer discretionary, 11% healthcare, 9% communications, 1% basic materials, 5% energy, 4% industrials. I mean, this global ETF is as American as apple pie.
Well, we do the Hall of Famers and international Hall of Famers. It's a momentum strategy, trying to just capture the biggest gains from the largest stocks all around the world. I love this index. I think it's great. Simple.
Yeah, it looks like Samsung might be the largest, and that's like 1%.
Pat, what do you think? Do you buy emerging markets now, or do you wait?
I think you wait for a little bit. I think I don't know if they're completely ready for it. I mean, the chart looks clean, but something just tells me it needs a little bit more time.
And do you want to buy emerging markets, or do you want to pick which emerging market to be in?
I think that's
difference.
Yeah, I know. I think you're spot on. Being selective, and it's really been China driving it. So if you're buying emerging markets, you might as well skip the middleman and just go right to China.
If you want to buy, right. If you want to buy China, buy China. If you want to buy India, buy India. Like, this isn't like 25 years ago where like you didn't have these options. There's plenty of options, right?
What do you think of Strazza's idea, long China, short India?
I think that's the numerator fallacy. If you substitute India with the United States or anything like that, China's outperforming all of these. So it's less about the United States or less about India there and more about the numerator. I think
maybe, but I think India would be on the bottom of my list of things that I want to buy in emerging markets right now. I think India is losing momentum.
Wow. Let's just take the best one and just eliminate that from the conversation. That's always a good idea.
The Nifty 50 hasn't been overbought since December.
We got to send Strazza to India.
I see what you're saying.
It looks terrible.
Can we send Strazza to India? Somebody want to take Strazza to Mumbai? Show them a good time.
It won't change my... Listen, I went all around Asia, and unfortunately, at that time last year, I had to tell every country that I went to that their charts did not look good. So I'll do that.
I would argue that Strazza, who is a single man, Strazza, India, the city of Mumbai in particular, I have argued and will continue to argue, might have the most beautiful women on planet Earth.
All right, great. We'll have to go there. I'll do some boots on the ground research there then. We'll check that out.
And you love Miami, and it looks and feels like you're in Miami in a lot of these places.
I don't know what you're talking about. I love Miami for the food and the ocean.
That's That's the only reason you love Miami.
Are you not?
The eye candy in Miami is not relevant.
I don't eat candy. I'm on the Perlman program. So do you not love this reversal in Malaysia?
That's a nice one.
Do you not rather own this one than India? I like the freshies. Fresh uptrends. Throw up Singapore. Huh? Nothing? Not enough?
Singapore's a developed market. It's just a shitty one. But
it's fine. I'm just doing
it's also 50% financials.
Yeah. They're a little different.
So let's remember that.
How about the scoop and score in Thailand?
Yeah.
A little Vietnam for you?
After Strazza goes to India for the first time, he's going to forget all about Vietnam.
I doubt it.
Dude, when you go to India, as long as you eat a ton of burgers and steaks before you go, just be sick of red meat. As long as you do that, you're going to love Mumbai.
Yeah, the meat thing, 1 hole. I know. It's
a meat thing. I learned that one the hard way. I was going into I was having withdrawals. It was not good. It's not good. Yeah. All right, let's go to a little recess, Spencer.
I want to talk about food.
All right.
Let's do it. Oh, were those your pictures yesterday? But
I couldn't compete with your Wagyu, so I waited.
Okay. All right. Well, we'll do it right now.
All right. Let's see it.
I took a little 2-day trip up to Florida, and I got some of my favorite New Haven style pizza. If you are eating the best pizza or some of the best pizza, you'll know it because it'll look like this. Your pizza should look like this. Does that make sense?
Like almost burnt, right?
Yeah, that's right. That's right. So this is from Fantini's in Stuart, Florida. And then one more. JC, you're going to like this. I am so bullish caviar. This is from Kyle G's in Hutchinson Island. Put caviar in everything. I want it on my lox bagel. I want it on my oysters. I want it on my sushi. This was really good. So the happy hour there, you could just go and crush oysters. It's right on the beach.
I'm down with caviar. Been down. Welcome to the club.
And it's a healthy dollop, you know?
There are few things in this planet, like seriously, few things in this planet that are as healthy for you as caviar.
I think we should all just put it on more things.
On the nutrients on a per ounce basis of caviar is on another planet. On another planet.
That'd be an expensive diet.
In fact, our rabbi has said that if you are eating caviar, it's so good for you that the Cape Cod chip that you're putting on is okay.
Really?
Yep.
Wow. All right. How
about that?
This is news to me. Yeah, Fantini's. Go. It's excellent. So the owner of Fantini's used to work at Pepe's. Is the secret. That's the secret sauce. He's a long-time New Haven pizza maker, right, from the famous Worcester Street Pepe's Pizza, and now he's down in South Florida, opened his own shop. It's really good.
I drove through Connecticut this weekend, went through Hartford. So many insurance companies. I'm like pointing them all out.
It's
like,
awesome.
There's the Hartford. There's Travelers. There's, Aetna. There's just boom, boom, boom.
Capital, baby.
Hartford, Connecticut. You don't need to go there.
No. Unless you're going to a UConn game. Huskies.
My reset is just shout out to Peloton. It looks like it may be getting taken over. One of these weeks or months, they're going to get taken out.
Call them bullshit. Call them bullshit again. How many times have we seen these rumors? The time to sell this
maybe twice
3 years ago. They missed it.
No, Strazza, because not to get all fundamental, but there's something to be said with, they have an audience, they have people, they have information on these people, a company that wants that information and those people, maybe in the athleisure business, maybe in the some sort of athletic,
this is prime PE
just because
meat.
It's not valuable to you, me, and 99.9% of the planet doesn't mean that it's not valuable to somebody in a more unique way.
This is an epic corporate failure because this was an appealing proposition, what you're describing a few years ago. What have they done over the past several years? They've destroyed their brand. They have destroyed so much brand value. They could have sold themselves 2022, probably, and gotten a good deal that they would have been happy with. Now that they're going to have to sell themselves for pennies on the dollar, it's over. It's over. And if they don't get bought up by private equity, it's slowly going to zero.
I mean, it's not their fault. It's not their fault that they pulled forward decades of growth in like 2 years, right? Like, not their fault.
It's not their fault, Spencer.
Crap business.
Come on.
They did. For all, like, in a non-COVID world, this could have been a totally different company, but we'll never know.
Bullish caviar, bearish Peloton. Excited to talk to you guys.
Yeah, Spencer, what are you talking about, man?
It's 10 o'clock, Spencer.
They pulled forward all their growth because everybody was trapped at home.
He's talking about the pandemic surge, pandemic boom. Boom time.
Yeah, what are you talking about? That's what I'm talking about. All right. Pat, what do you got? Anything?
No, I was going to say, I think Peloton, it probably would have ended up this way either way, even if
maybe in 10 years.
This accelerated it. It was
the
almost
stock
like
is down. The stock is down 98%.
Oh my goodness.
Yeah, it's going to be down 100.
And you're telling me that it's not their fault.
No, I didn't say that. I said it's not their fault to be.
98%.
I agree with what Pat just said. This way, it would have ended up this way, but it would have taken a lot longer.
What is it? Strazza's fault the stock's down 98%? Is it my fault? It's their fault. They suck at this.
This is a company that still probably doesn't come public in a lot of markets.
It's a bicycle that doesn't go anywhere with an iPad on.
You know, never really that exciting. Let's shut this thing down, guys.
All right. This is in and out. We're doing CRL 1 o'clock today, and we're doing the Flow Show at 2 o'clock. John and Steve. So right here on the channel, check out all the links in our description. Thanks to Todd Sohn. Thanks to Patrick. Thanks to all of you in the chat. Go make some money. Catch you later.
Adios.